G'day everyone, welcome back to Pete's Investing. Today is June the 9th, 2023. This is the NASDAQ price update. You can see here we're in a bullish momentum on our weekly and we're broken down into a neutral positioning. So let's look at each of these. On the weekly, first off, it's bullish, and that's because the CCI 150 and the price chart moving averages are aligned and moving in the same direction. However, we want to make sure that the daily and the hourly align before taking those trades. On the daily, you can see there it's broken down into a neutral position because it looks like the CCI is breaking down slightly, and that's not matching quite right with the moving averages of the price chart. As well, I did have previously drawn in this divergence, this bullish divergence. A bearish divergence on the CCI versus a bullish divergence on the price chart. Now that's still playing out. The price is still just hovering around those, making potentially new highs. It's sort of stopped at this resistance at 14,660. And I've got this, if this CCI continues to the downside, we're most likely going to see the price collapse as well. And if it does, it'll collapse below this channel. And our initial target will be the 38% and a 50% retracement level. So again, this is still in play with a slightly bearish to flat divergence on the CCI. For this to fail, we need to see the CCI break to the upside. On the hourly, if I zoom in, just ignore this dotted line. That's the daily divergence on the price chart. So what we're looking at here is this green dotted line, the bearish divergence on the CCI versus a bullish divergence on the price chart. Notice how the price has fallen off and it's starting to collapse, and the CCI is continuing downwards. That's our bearish outlook for the price as well. So the way you would plot that, if you're going to trade this, you draw a channel between that point there and that high where that divergence range is, and you bring it down to the lowest candle in that divergence range, and then you look at the Fibonacci retracement from that recent low. Yeah, didn't work. Let's try that again. Up to that point there. And what I've done here is I've drawn a little rectangle, which is our initial target area. You can see there the price has just possibly touched it on that 38% level. And if I zoom in, you can see the wick, depending on how I draw it, will maybe just touched it or maybe just bounced before it, doesn't really matter. And down to possibly the 50% level. So we're going to keep that in there. The price has gravitated back towards that lower channel. We're going to keep that in there, but basically that's your initial target area, is the closest Fibonacci level. We probably could have drawn a target area from the 23% to the 38%, but you'll notice there we were within that 23% when the price broke down below that channel. Hence, I drew the this initial target area at the 38% level. And also, if I zoom out, you'll notice there's a back test here on the bullish programming, and also a back test on the bearish strategy. You'll notice there are a couple of little averaging downs. There's a big average down here, and that's where we average down. We don't use stop losses. And the way to avoid those average downs, that's why I talk about these in the beginning. You must make sure the weekly and the daily are aligned and take only long trades, in that case, during that price rise. And likewise, during this period on the weekly, you take predominantly short trades, making sure those short trades are aligned on the daily, and that's where you would have taken those short trades as well. So to understand how to trade this and other trading strategies, reference the links in the description below. Subscribe to my Patreon page, where we also do scans of stocks, currencies and commodities. Subscribe, like and share the channel. Thanks for watching, and see you in a future video.